$60 oil, what kind of issuance will you expect?
I think you'll see issuance pick up again in the first half of next year. I mean, it's certainly been a quiet second half of the year following a blockbuster first half. And I think that was the result of the pullback in oil over the summer. And it was a function of the underperformance of the oil equities and energy equities compared to the broad market, creating a softening of sentiment. But I think that's about to turn around as we move into the first part of next year.
And a year ago, you said it was really going to be oil services that were going to lead the IPO market this year. A, did that pan out? And B, what's your pipeline for next year?
It did. So if you go and recast this year, I'd say about 2/3 of the IPOs this year were oil field services, handful in midstream, handful in upstream. As we look into next year, I think it will be more balanced across the three subsegments of energy, but I think that probably by count, oil field services will be well represented more than the historical norms.
Do we learn anything about why companies are coming to market versus just staying private?
Yeah, I think, what's been interesting is an interesting trend has been the slowdown in the acquisition market in energy. So historically, a lot of, I would say, the prime private companies have been sold to the public companies for cash. And I think what you're seeing now is the public companies having deeper inventories, more moderated growth expectations, relying more on their existing inventory, and that's creating opportunity for public investors to directly invest in some of the leading private companies.
So with the theme of public companies being you want to put more money into buybacks and dividends and less in production growth, that's the priority that's shifting, and that holds for private companies wanting to go public too?
I think that's what you're going to see. I think you're going to see the larger companies reduce the pace of acquisition and focus more on generating returns off their existing asset base and more on living within cash and potentially returning more cash to investors. It's going to be a slower growth, but there's going to be growth.